Hey everybody, I hope everyone is doing well and had a good day. In this video, we're going to review the E-mini S&P 500 5-minute chart for Monday, May 11th, 2026. On the daily chart, you can see here in the bottom left corner of the screen, this is the daily chart. The market has been in a tight bull channel. Bull breakout followed by a tight channel and then another breakout with no pullbacks through here. So the market's always in long. There's really no sell signal and the selling pressure is weak. We have open bull breakout gaps. And on the 5-minute chart today, going into the day, there's a lot of trading range price action on Friday with a gap down going into the day, testing support, and then bar one, it's a fairly big bar. The problem with buying bar one is that it's a fairly big bar and it's forcing you to buy at the top of a trading range. So if you buy bar one, then the prior day's high, Friday's high, is just above. And it looks like if we look at the prior trading day, this area was acting as resistance all day. So I think it's difficult to buy bar one given the context, big bar and testing resistance. Bar two is a small inside bar, market's pulling back, but it's probably not enough to reverse bar one. Bar one is a strong enough bull breakout bar that it's probably going to get a second leg. Who's trapped with the bar one bull breakout? The market gapped down to the open of the day, basically down here. And any trader betting on resumption down after the gap down is getting trapped. So if an aggressive bear is selling right on the open of the day, they're getting trapped by the bull breakout. And then follow through buying 3 and 4 inside bar 5. So the bulls now have a 5-bar micro channel, and that's good for the bulls. Increases the probability that there will be a second leg up. We broke out above the prior day's high. Bar 3 closed above yesterday's high, and there's a follow-through bar on 4, and 5 is still above the breakout point. So any trader selling at Friday's high with a limit order, they're trapped into a losing position. The only way a trader could avoid a loss selling here is if they maybe sold at the prior day's high and sold more on the close of bar 4. And then bar 5 tests their break-even, their average entry, so break-even price. Bar 5, it's an inside bar, and it's a relatively small bar, and it's the first sell signal against this micro channel. So it's a low probability sell. It's a relatively small bar, so if you sell the bar, stop above the bar, you're probably going to lose money, which means more likely traders will buy the first reversal, betting it's a minor reversal. It becomes a pullback, and the bulls basically get a spike and channel second leg up. So we found buyers below bar 5 on 6, went sideways for a few bars, but eventually buyers below bar 5 on bar 6. The market went sideways for a couple of, actually the bulls got their trend resumption. Strong breakout to a new high, 6 through 10. The expectation is sellers above bar 4 as the market evolves into the channel phase. Traders buy pullbacks and take profits at new highs, but 10 is a strong breakout bar closing far above the prior swing high, and that traps traders. So there might be buyers somewhere below. It's a strong enough price leg that 6 through 10 itself will probably get a second leg up of its own. A very small bar, follow through bar 11. Bar 11, if you're going to buy or sell 11, the stop is probably, if you're buying bar 11, the stop is either below bar 6 or it's a very wide stop, maybe at the low of the day. And then as far as selling bar 11, no matter where you put your stop, it's a low probability sell. You're trading against a tight bull channel. Bar 12, a little bit of a surprise bar. It's a big bear breakout bar. The traders buying for any reason, 9, 10, 11, they're getting trapped by the bear breakout on 12, which increases the probability that 12 will get follow through or a second leg down. But the channel up, 10, 1 through 11 is strong enough that even the bar 12 bear breakout is probably a minor reversal, and there's probably buyers somewhere at support, whether it's the 50% pullback, maybe the bar 2 high breakout point, the prior day's high. There's probably buyers somewhere below, because even though there's a pullback, bar 6 fell below bar 5. 1 through 11 is a bull breakout on a higher time frame, and 12 is the first reversal attempt of that breakout. So this breakout, 1 through 11, is probably going to get a second leg up. But 12, strong enough bar to disappoint and trap the traders who are buying 9, 10, 11, which increases the probability that at this point the market is either in a trading range or a channel, and there's probably sellers above bar 12. 13, bears get a follow-through bar, but it ended up closing far above its midpoint. It's a buy reversal bar, so the bears prevented the bulls from getting a bull close on the bar, but there was a rally from the low of the bar into the close of the bar, and that's a trendline break on a lower time frame. And like I said, it's still following this bull breakout. So there were buyers maybe at the 50% pullback, maybe a little bit lower. And the traders selling bar 12, maybe they take a counter trend scalp, but as far as staying short here, the problem, like I said, is that it's more likely either evolving into a trading range or a channel, not an opposite trend, not a bear trend. There's not enough evidence that it's a bear trend right now. There's probably sellers above 13, but they may not come in until the bar 11 low or the high of the day. 14, it's another trading range bar. For the bears, maybe they're looking for bear breakout, pull back, second leg down. But as far as selling below 14, there's probably more traders buying below 14, expecting the bull breakout to get a second leg, and it's testing support, the prior day's high. And the bull's getting strong trend resumption in the form of another micro channel 13 through 17. Bar 17, it's a pretty strong breakout to a new high, but more than half the bar is below the breakout point. You can see the majority of the bar is overlapping the bars to the left. And I already said that market cycle is probably a channel or a trading range at this point. You don't get bars like 12 and 13 when the market is in a very strong bull trend. So there's probably sellers above 12, which they may come in on after bar 17 here. You can also count 3 legs up, and because the market is testing the bull channel line, that also increases the probability that bulls will sell to take profits and bears will sell above bars, at least for counter trend scalps, because the traders who sold above bar 4 and scaled in made money. The traders selling above 12, scaling in, are probably going to make money. So 18, it's a trading range bar, disappointing bar for the traders buying 17, probably sellers above 18. Not a great stop order sell below 18 because of the micro channel and the doji signal bar. So there might be buyers below 18, but they may not come in until a little bit lower, maybe like the breakout point high of bar 16, somewhere down here, or maybe even the 50% pullback of this price leg 13 through 18, because this one pulled back about 50%. This one may pull back about 50% as well. Consecutive inside bars, market's in breakout mode after breaking out to a new high. It is a stairs pattern because we broke out to a new high here and the bears made money. So now we're breaking out to a new high here. The bears are probably going to make money, but because of the consecutive inside bars and the fairly strong price leg 13 through 17, a breakout in either direction after the II pattern is probably going to retest this tight trading range. 21, bear breakout bar, but testing that breakout point that I mentioned. It's also approaching the moving average support, which has been support since breaking out on bar 1. Bar 2 tested it, it became support. Bears were unable to break below it on 13. Bears were unable to successfully break out below it on bar 13. Now we're approaching it again on channel's probably going to get a second leg up or some sort of hesitation before there's any major reversal. 22, you can see testing that moving average and then reversing back up. Now it's another buy signal in the direction of the trend. The market is channeling up. It's creating higher highs and higher lows. So bears selling for any reason may exit above 22, expecting, well, maybe they can sell higher. They can sell above 18. 22 may lead to a rally to a new high, but even if it does, there are probably sellers above the new high, which is the current high, bar 18. Decent entry bar 23. Reversal and follow through probably will get a second leg a little more to the upside, probably will test the high. And then 24 breaking out, but now it's a fourth push, testing that channel line. Once again, the upside might be limited. 22 through 24, another strong leg for the bulls in the direction of the trend. It'll probably get a second leg up, but because we're finding sellers at each new high, we may pull back here first. 25, it's a bear reversal bar, relatively small bar following a strong micro channel. It's another one of those setups that offer good risk reward, but low probability. So there's probably more traders buying below 25, expecting a minor reversal and then one more leg up to a new high above 25, which it looks like that happened in just two bars. 25, 26, pulling back below 25, and then 27 breaking out to a new high. Now we have 4 bars going sideways at that new high in leg 3 or 4, testing the channel line. We may start to correct and go more sideways to down here, but the selling pressure, not as strong as it could be. It's not terrible selling pressure. 12's a good bar, 21's a decent bar, but there are open gaps along the way, and that's a problem for the bears. What the bears do have going for them is when the market breaks out to a new high, that breakout gap gets closed, breakout to a new high here, and the pullback falls below the breakout point. Breakout to a new high, and the pullback falls below the breakout point. And that's a sign that this might be a leg in a developing trading range. We know that most of the time, channels evolve into trading ranges rather than breaking out in the direction of the trend. In other words, breaking above the bull channel line into a stronger trend. So it's more likely that the market's going to correct for a couple of legs sideways to down than break out strongly above the channel line here. But 22 through 24 is still strong enough for a second leg up, and now it's basically a high 2 on 28. Some traders will take the buy for a second leg, but it's a fairly tight trading range. Limit order market, probably traders buying below 27, selling above 27. Another outside bar, 29, small 3 pushes up in a bigger 3-legged pattern. There might be sellers above 29, also breaking out to a new high, and every time the market has done that, it's pulled back, so reasonable to sell. Small follow-through bar, 30, it's a bad sell, probably buyers below for at least a small second leg up, which 31 pulled back and triggered that sell. If you're selling below 30, you're selling below a trading range bar in the middle of a tight trading range that just had a bull breakout. So the traders selling anywhere in this range, trapped by bar 29, may use 31 or 32 to exit, which that's the dynamic that produces the second leg. And this developed into a high 2 bull flag. You can redraw the channel line. That's one way to draw it. And 35, a bull breakout bar, an outside bar. However, it's a fairly tight channel through here. It's also a nested wedge. You can call it 1, 2, 3 legs. There's 3 legs here, 1, 2, 3. There's probably sellers above bar 30. So the upside here, even though 30 5 is a decent bull bar, probably a limited upside. 36 breaking out to a new high but failing to close at the new high. And then a doji bar, 37, so going sideways again at a new high, ultimately still expecting this channel, the bull channel, to evolve into a trading range. The market's getting squeezed into it got squeezed into a very tight channel here and went sideways, breaking below or sideways below the bull trend line. That is a sideways trend line break and then a retest of the trend's extreme, and then a sell signal, 38. 38 is a second reversal, first reversal, second reversal. It's a double top. I think it's okay to exit longs below 38. Selling 38, it's a setup that has good risk reward but low probability. So selling below 38, you have your stop is not very far. The bars are small. And your potential reward, if this channel is going to evolve into a trading range, one target is down here, another target is all the way down here. So it's great risk reward, but low probability. And then 39, it's a great entry bar for the bears who sold 38 because they immediately make maybe 5 times their risk. They reach that first target, the bar 21 close, but a huge tail on 39. That's a warning that the market is more likely in a trading range, and there's buyers somewhere down here. So it's a micro channel, but it's also a breakout pullback in the same bar. It's probably going to get a second leg down, but there's probably buyers below 39. The bears getting that second leg. It's still a micro channel, but there's a significant pullback from the low of 39 to the high of 40. That's a trend line break on a lower time frame. But continuation, it's a micro channel down to 42. 42, not a very good stop order buy because of the bear micro channel. Expectation is at least a small second leg sideways to down. This is probably sellers above 42. And the sellers come in and the bears get their second leg down. You can call it 3 pushes down to this support area. We're in this support zone. The expectation was the channel would evolve into a trading range, but probably find support from anywhere from the 21 close to the bar 13 high, this breakout point, the high of bar 13. And then you can see the market is repeatedly testing this area and bouncing. So what's going to happen? 45, 46. 45 is a decent breakout bar, but a small follow-through bar, 46. And let's see if the bears can get more follow-through. But instead, after the 3 tests of that support level, the market's getting a strong bull breakout bar. Now at this point, what kind of pattern do we have? It's a spike and channel bull trend. There's a bull trend line here, a trend line break, and now possibly the bulls are going to look for a test of the trend's extreme. The bears are hoping it becomes a major trend reversal, trend line, bull trend line break, retest of the highs, and then either a lower low, double top, or higher high, major trend reversal. But no matter how you look at it, this looks like a trading range. We have bars above the moving average, but it's in a channel with a lot of bear bars and overlapping bars, especially through here. Now we have a sell-off down to the bar 22 low and below it. So a couple legs up, a couple legs down. The market's in a wide trading range. The expectation here is a test of the highs. It would be lower probability, less likely that the bull channel immediately reverses into a bear trend. So I think here both the bulls and the bears are expecting a test of the trend's extreme, which could be the high of the day. It could be breakout points like the 37 or 38 low, somewhere up here. is probably going to be resistance, but strong bar 47 after 3 tests of support. 47 will probably get a second leg up. If you're short for any reason, it's a reasonable bar to exit shorts above. It's also a reasonable stop order entry for the bulls. Small follow through bar 48 and then 49 more follow through buying. That's good for the bulls. It looks like they reach almost 1R, close to 1R in just 2 bars. And because they're reaching that 1R profit target and they're testing this resistance area, we may start to find some hesitation here. I do think there's probably traders selling at the new high because at this point the market is in a trading range. 22 is a major higher low. Market's channeling up with higher highs, higher lows. Market broke out strongly to a new high. That makes 22 a major higher low. And 39 fell below that low. This is probably sellers, like I said, at the new high. Bulls got a strong micro channel, 51 breaking out to a new high. Can 51, the breakout bar to the new high, get follow through? And instead 52, it's a strong bear reversal bar. It's a strong enough rally that the first reversal down is probably only going to be minor. In other words, there's enough momentum buying by the bulls that 52 is unlikely to reverse the market straight into a bear trend. Instead, there's probably buyers below strong bull bar 51 or somewhere below, and the market will probably hesitate and go more sideways before reversing. But the bears, like I said, it's a spike in channel bull trend followed by a trend line break. Now we have a higher high test of the old trend's extreme. The bears are hoping it's a higher high major trend reversal. But more likely, the market's going to evolve into a trading range. The buying here is strong. The bull trend, it's a fairly tight bull channel. The trend line break, not all that strong. 39 is a big bar, but closing above its midpoint. It's enough to disappoint the traders and create sellers at the new high. But at this point, there's also a strong enough rally here that there's probably buyers down here. In other words, the bottom of the trading range might be somewhere down here. A 3-bar micro channel. The traders buying 51, disappointed by the selling. That creates resistance above. There's probably sellers above 54. I still think this is strong enough buying that it'll get at least a small second leg sideways to up. But 52 through 54 is now a strong enough reversal that there's likely sellers above and a second leg down is likely. Which means 55. Does that make 55 a good buy or a good sell? Well, based on what I'm saying, if I'm a trader who bought bar 51, I'm disappointed by bar 52 and further disappointed by the follow-through selling 53, 54, which means if I bought 51 and maybe bought more below 51, I'd be happy to get out at my original entry at the close of 51. So 55 might be a sell to close bar. And then no follow-through for the bulls on 56. Bears are hoping to create a lower high and get that higher high major trend reversal. Bear breakout 57, second entry short. The micro channel got its minimum second leg sideways to up, testing that high close of 51 and then finding sellers. Reasonable to sell out of longs below 57. I think it's also reasonable to go short below 57. Second entry, sell, bear breakout at what's probably the top of a channel or a wide trading range. Another 3-bar micro channel, sellers above. A doji bar, we're going sideways. The market's in breakout mode. It's a triangle. Bears have a breakout 61, follow through 62. This is falling far below this triangle structure. 61, 62, likely to get a second leg down. Why? Because the trader's buying for any reason. If you're buying this bull trend line, buying below 60, buying the moving average, you're getting trapped by the bear breakout. And the dynamic of trapped traders is what produces second legs. Now we have a decent breakout and follow through 61, 62. Also, the bigger picture structure makes sense. Bull trend, trend line break, retest, and then a possible major trend reversal, even if it's not a major reversal into a bear trend. It could still evolve into a wide trading range with prices below to test. 46 is a magnet. It's a bad stop order buy signal bar. Might be support here, support down here. 63, a doji bar, but micro channel. It's a bad stop order buy, which means it's a reasonable limit order sell. You can sell the close or sell above 63. More selling. Sellers above any of these bars, it's probably sell the close. 66, a bigger bar. 66 might attract profit taking because in the big picture, this chart is in a trading range. It's not clear that the market is in a bear trend, even though it's a strong bear breakout here. We have to keep in mind it could be some kind of wide trading range. Some traders might see an expanding triangle, 3 legs down to support with acceleration, a big bar far below the moving average. 66 might attract profit taking. The traders who sold above, the traders who sold before 66 made a windfall of profits on 66, and that can attract profit taking, especially when you might be testing support in a trading range. This area also acted as support earlier in the day, breaking above on 4, testing it on 6, and rallying. Unable to break below on 13, rallied again. So we'll see if that acts as support later in the day. A small follow-through bar, 67, testing that support, also testing Friday's high, which is probably support. It was support earlier in the day. 68, a bull breakout bar. Can you buy 68? It's a bull breakout bar at support. It's probably better to wait for a second entry long after all of this selling, even though it might be a big leg 3, and this might be a climactic reversal. Bears suddenly getting acceleration near support. But for me, I think 68, it's kind of like selling 52. It's a decent bar at resistance, but the micro channel, there's just too much momentum. It's too likely that there's going to be some kind of hesitation in a second leg before the bears get the reversal. I think the same but opposite is true with 68. The bears will probably get at least a small second leg sideways to down, some kind of hesitation before 68 gets a second leg up. And that's that hesitation, 69, 70, 71, but probably buyers below 68. You can see momentum, 3 pushes down, 69, 70, 71, tails below the bars, and testing support once again. And 68 was a strong enough bar that bulls might come in and buy below for at least a scalp. We're probably in a trading range down here with all the overlapping bars since 67. So it's a limit order market, buyers below and sellers above bars. 75, a third push down to support, probably buyers below, buy the close. 75, reversing back up, but testing resistance. The upside's probably limited. Testing the moving average, but double top with 69. After that bear breakout, this might be a low 2 or low 3 short. So the upside here is limited. Unlikely sellers above 69 as we are in a lower trading range here. 78, bull bar, closing on its high. But like I said, there's probably sellers above 69, so I think it's unlikely that 78 gets another follow-through bar of buying. 79, reversing back down into the range. We may come back and test the middle of the range, but it's getting late in the day. In this case, bar 81 went and tested the opposite side, the support below the bars to the left, but even that breakout failed and reversed all the way back up to the upper third of this trading range here. That's it for today's end of day review. Thanks everybody for watching, and for more information on price action fundamentals and how to trade price action, please visit the Brooks Trading Course link in the description of this video. Thanks again, and I hope everybody has a good night.